All right, today we're putting on our detective hats and doing a deep dive into the technical signals for one particular stock, Broadcom, ticker AVGO. We're going to see if we can crack the code together just using the charts as our guide.
So AVGO has been on an absolute tear lately, just a wild ride. And that leaves us with the million-dollar question, right? What happens next? Is it going to take another giant leap, or is a pullback just around the corner? That's the core mystery we're trying to solve today.
You know, any good investigation has to start by surveying the scene. So let's get the big picture for this stock before we really start digging for clues.
Okay, so if you look back to about mid-July, AVGO started this really powerful climb from around $280. It absolutely rocketed up, hitting a peak of nearly $375 by September 10th. Sure, it's pulled back a little bit since then, but it's held on to a ton of those gains, closing recently around 356.70. So the big picture is pretty clear. We're in a strong uptrend.
Okay, now for the fun part. The first real clues in any stock investigation, well, you just follow the money. And we do that by looking at more than just the price. We look at trading volume. That's what tells you where the really big players are placing their bets. Now here's where it gets interesting. While the price peaked on September 10th, our first major clue actually shows up a few days earlier. Let's zero in on September 5th, because on that day, the market left a massive footprint in the sand.
On a normal day, AVGO trades a pretty standard amount, but on September 5th, the volume just exploded. We're talking over 78 million shares. That is a gigantic spike, an anomaly that basically screams for your attention. This isn't just market noise, folks. This is a major signal that something important is going on under the surface.
And this isn't just random buying and selling. A volume surge of this size is the signature of the big institutions, the pension funds, the hedge funds, the real heavy hitters. It tells us that the smart money was piling into the stock, and they were doing it with some serious conviction. That's our first critical piece of evidence.
So, we have an uptrend, and we know the big money is involved. Case closed, right? Well, not so fast. When we bring out our more advanced tools, the technical indicators, the story starts to get a lot more complicated. Suddenly, we're getting all kinds of conflicting clues.
First, let's take a look at the moving averages. The best way to think of these is like a compass for the stock's trend. We look at different time frames, short, medium, and long term, to get a complete picture of where it's headed.
And for AVGO, that compass is pointing strongly north. The current price is floating comfortably above all the key short-term and medium-term averages. And it's way, way above the long-term 200-day average. So this set of clues is telling us one thing loud and clear. The trend is healthy and bullish.
But here's the key question. Is this trend running out of steam? To figure that out, we use momentum indicators. You can kind of think of these as a hype meter for the stock, telling us how much energy and conviction is really behind the move. And this is where our mystery really begins.
And this just lays out the puzzle perfectly. On the left, you've got plenty of bullish clues. The price is above those moving averages, and other tools show that money is still flowing in. But then you look at the right, and you start seeing some worrying signs. Momentum is weakening. A key trend indicator is flashing a potential reversal. The price is pushing right up against the potential ceiling. It's a classic technical tug-of-war.
So how do we make sense of all this conflict? We map out the battleground. We have to identify the exact price levels where the bulls, the buyers, and the bears, the sellers, are going to make their stand.
The easiest way to think about this is that every stock has a floor of support below the current price and a ceiling of resistance above it. These are the key boundaries that are going to tell us what happens next.
The analysis shows that the immediate ceiling, that resistance, is right where the stock is trading now, at about $356.75. This is a known technical barrier, which means the stock is literally knocking on that door right now.
And if it gets rejected from that ceiling, the first floor of support is waiting down at $339.78. And this isn't just a random number. It lines up almost perfectly with the 20-day moving average, which makes it a really significant level to watch.
Okay, so let's recap. We've surveyed the scene, we've gathered the clues, we've decoded all the mixed signals, and we've mapped out the battleground. Now we can finally pull it all together and outline the most likely scenarios for what could happen next.
From here, there are really three paths forward. First, you have the bullish breakout. If the buyers can push the price decisively through that 356.75 ceiling, the next logical stop would be a test of its recent high near 374. Second is the bearish breakdown. If the sellers win and push the price below the 339.78 floor, we could see a drop to the next support level around 322. And third, the stock could just go sideways for a while, consolidating between that floor and ceiling as it digests the big move it just made.
So what's the big takeaway from our investigation? It's this. AVGO isn't a powerful, long-term uptrend, no question, but it's starting to show some signs of short-term weakness right as it hits this absolutely critical resistance level. The stock is at a major fork in the road.
So, we've laid out all the evidence. The clues are on the table. The only question left is, which path will it take? Is AVGO about to break out and push for new highs, or is it about to break down and take a rest? The battle between that floor and ceiling is what's going to give us the answer.